There's a very specific reason why this Bitcoin bull run is likely to be much bigger than those in the past. As we said here, Bitcoin bull run on steroids. This is based on a tweet from my good friend Bill Barhydt, who is here today to share his thoughts. Of course, we've also got Yago because it's Thursday. We're going to talk about everything Bitcoin and markets. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and hit that like button. We love a little hyperbole in our titles. Bitcoin bull run on steroids. Here's why Bitcoin is poised to erupt. BTC. You see, if we said Bitcoin once and BTC once, maybe it would help the algorithm. But this is based, Bill, on a conversation we've had many times. But you had this awesome tweet right here. We're in for a Bitcoin bull run at a scale we've never seen. There's a simple yet game-changing truth about Bitcoin that many ignore. You made a video. Maybe you can just simply break this down for us, the thesis here.
Sure. So my thesis is based upon the confluence of a whole bunch of things, but the most important piece of this confluence is basically government liquidity, right? My working assumption has been for 18 months, and I'm not the only one that talks about this. There are people that get paid to talk about this. I don't. That we're in a basically a massive government printing liquidity cycle. I saw a fantastic chart yesterday from Jamie, I forget his last name. I think it's Coutts or Coots. I don't know how you say it. He basically talked about these, what he calls liquidity super regimes, right? And they're basically basing patterns that play out over multiple years. It just so happens that they also coincide. They have coincided in the past, more or less, with the halving cycle. This year, this cycle, it seems to be a little bit later. So in other words, we're coming out of a pennant basing pattern to the upside on government liquidity, maybe 6, 7 months later than in the last two halving cycles. But it points to a significant amount of money printing coming this year, combined with the last year's halving cycle, combined with tailwinds, now headwinds that have turned into tailwinds, right? With the government and Trump and all of the talk of I love crypto and regulatory clarity. But the bottom line is that we are seeing significant money printing this year. We've got $7.5 trillion-ish in debt that needs to be refinanced. That will be refinanced at higher rates. Yes, Doge is doing a good job in getting baseline down, but that is being massively offset by interest payments and the debt burden that we already have. So I expect to see crypto act like a sponge for that liquidity. I wouldn't be surprised to see I think there's a few people that think that Bitcoin dominance has topped. I'm unsure. It's possible, but I still expect to see the real alt run in the second half of this year. Really hasn't started yet, although it's been really nice to see the dominance kind of peter out the last week or so. But there's no evidence that it's permanently gone. It's clearly the trend is still there. It hasn't really broken trend yet. But I think sub 50, you could really say that it's maybe, well, I can't read the chart, but probably sub 55. Yeah. You could probably say you're
right there. Yeah, it's currently at 62. 0.85. It went as low as 61.89, and it had topped at about 65.4. So yeah. I think this was a nice little run, but yes, I don't think you can say the top is in. We know how this goes. You get your altcoin action, and then Bitcoin comes back and goes up, and everything suffers. Then you have that brief moment where you have your altcoin action.
Totally. The bottom line is the liquidity super cycle is just about to start. I think it's starting a little bit later than it did in the last kind of 10 years via the previous two halvings. I think that was partially a coincidence. It just so happens that these interest rate cycles have overlapped, and it just sets us up for a dramatic run. I think miners are still selling, which is putting some price pressure on Bitcoin still. And I think there's this wind-unwind game going on with a little bit of leverage, which is why everybody's saying, well, if all of these new companies are buying Bitcoin and blah, blah, blah. Well, first of all, the market cap of Bitcoin is over $1 trillion, right? And so, the ability for any one company to move the price is a little muted, at scale, especially when miners still have to sell to some degree. So the amount of new hash power that's come in at a very, very high price is significant, and there's going to be a push and pull as a result for a while. But I think the push is going to win.
Yago, I like it because this is just the simple. Listen, like they're going to print money. Global M2 is rising. Bitcoin lags global M2. All the money's going to come in, and it actually is enough to probably send Bitcoin flying without all the other fundamental tailwinds that we talk about here all the time, which is those institutions buying and likely government adoption, all those things. That's why, to me, I agree with you that this is kind of on steroids because
you still need a buyer,
right? Former drivers. Yeah.
So,
Yago, your thoughts?
I mean, I think this has always been the thesis, right? Fiat is dissolving, and Bitcoin is hard commodity money, which is borderless, and therefore the entire world can adopt it. And so I think Phil and I have been writing the same story now for, I don't know, 14 years, something like that. But Bill, I do have a question. So you, in your tweet, you say, this is going to be a run like we've never seen. What's your take on the idea that we're seeing diminishing returns from cycle to cycle?
Yeah. So two things. First, when I say the likes we've never seen, it's from the base of $1 trillion asset class, right? So we've never seen $1 trillion asset class go up 2.5x or effectively double in a few weeks, which I think has a very good chance of happening here. So that's obviously Bitcoin going from 100 to 500 is a much bigger percentage gain, but at that time it's worth like 1/1000th of what it's worth now, right? So that's super, that's super unique here. And I think what's also happening is as Bitcoin has gone up, the market cap has gone up, the ability for over-levered perpetual futures contracts to create, 70% volatility has been squeezing, right? So first couple of cycles, the volatility was 85%. My guess is this cycle, it'll peak at 40-ish%, or maybe already did with the last pullback, right? Which I think may have been 35 to 38%, and could easily diminish over time. And bigger pullbacks would be more macro black swan driven, like a depression kind of thing, which would affect the broader stock market and other risk on assets. But if it actually plays itself out the way we would believe over time, even then, gold would have a run up during a depression, right? So I really do believe that the broad-based adoption is squeezing the volatility of Bitcoin from cycle to cycle, and that has played itself out quite nicely over the last 6-7 years.
Yeah, and I think we're also seeing more sophisticated players able to participate, which means far more hedged positions, which means we're seeing dampening of the volatility on both the upside.
We didn't even have the options that they could use to hedge before on a lot of these products. So even the existence of the products to allow that to happen should dampen some of the volatility.
Yeah, but even if you didn't have the options, just think it through, right? So if you have an asset that goes from $1 billion to $1 trillion, and you have degens that have a smaller and smaller piece of it because of all the number of long-term holders, right? Their ability to move the market on a percentage basis gets diminished over time. And then on top of that, you add the options that you're talking about, and right, you basically squeeze volatility.
Yeah, I think that makes a lot of sense. Go ahead, Yago.
But I mean, if you were seeing the doubling that you're talking about in the space of a couple of weeks, I think we would be back to sort of 80% vol.
Yeah, I don't think it'll be a couple of weeks, to be clear. I didn't say that.
Yeah,
I think it could be multiple weeks as in months, but it's going to come faster than stock traders would expect. So.
I mean, if we're 150 or 200 by October or November, and then Bitcoin dominance tops again, and alts go crazy for 2 months, that would be pretty in line with previous cycles.
For example, 100%.
That doesn't mean that's the top. I'm just saying, like, that action shouldn't surprise anyone who's been here for 100. Speaking of which,
just given the opportunity, I'm curious. I want to grab as much alpha from Bill as I can. When you are looking at your liquidity measure or your M2 measure, what measures are you looking at? Oh,
yeah, by definition, it's predominantly U.S. and Chinese contributions to GDP, but you know obviously Japan and Europe have outweighed higher weightings than the rest of the world, but it's predominantly just money supply for U.S. and China. If you just track those two, right, and forget about everything else, you've got 80% of the picture, 85% of the picture. Everything else is either detail or noise. And the thing that's probably most unique about this cycle so far is the fact that the Fed has been holding rates steady while other countries have been lowering, and our treasury rates have been going up. And so this is a function of the fact that regardless of Trump's efforts, which I think are bearing fruits, a lot of countries just don't want to hold our debt right now. And predominantly that means China and Japan, who are net sellers and have been net sellers for some time, in a market where that we have to refinance more debt than we've cumulatively printed before that. So
yields open the day at 4.55%, right? Yeah, we shouldn't be in a situation where you have dollar up, yield up, risk up, Bitcoin up, crypto up, everything literally up except for gold. But gold now looks like it's bottoming. So maybe that's giving us a hint that we're about to see another kind of wobble here with the market. I mean, hard to know, but
yeah. But even debt at the end of the day is supply and demand, right? So the supply of debt far outstrips the demand. That means that the price of the asset is falling, and rates move opposite of price, so the rates are going to go up. Now, I do think that there's deals to be had. We don't, they're not going to start doing press releases at the White House talking about how all these countries are going to buy our debt. That's not very sexy. But I wouldn't be surprised if some of these backroom dealings on tariffs includes commitments to buy treasuries.
Yeah. 100% when they probably have been selling them since Liberation Day to defend their own currencies and to fight back against the United States, for sure. Interestingly, we talk about sort of the maturing trades and options and the things that have been coming. I don't know if you guys saw this story, but investor Jim Chanos, famous investor, says he's been long Bitcoin and short MicroStrategy for the last couple of years. Wouldn't he be basically homeless at this point? I'm just kidding, because obviously it depends on size. But how do you go on TV and say that you've been doing this for years and pretend like that's going well?
Yeah, I don't get it. I looked at that and I just said, okay, this is a black swan type of investment, maybe. But even then, I would expect in a black swan they would both fall precipitously. There's something that I'm missing about the math of what he's saying. Okay, so the principle is there's a premium on MicroStrategy. Let's explain what he's saying first, right? There's a premium on MicroStrategy.
It makes sense.
We all get that. His premise is that premium will close, similar to the way, it's not exactly the same, but when we had the grayscale arb trade going on, there was a premium to NAV, and traders were effectively taking advantage of that to squeeze the premium out as an arb profit. It wasn't really an arb as we saw with BlockFi and others, but it was the trade was there for a while. He's basically making the same claim as it relates to publicly traded assets, Bitcoin and MicroStrategy stock. The problem is that MicroStrategy has created a perpetual motion machine that keeps squeezing that arb out to buy more shares and keep going over and over again. And he has no intention of stopping. I guess the biggest risk to, or the biggest opportunity for him would be, unfortunately, if something would happen to Michael Saylor and they stop doing it, I could see the premium closing quickly.
Well, I think there's another risk to the premium, and that is that once you invent free money machine, everyone wants one. So now we're already seeing it. Tether and SoftBank launching one, and we've got the Nakamoto one launching. And so that drives more competition on that premium, right? So if you're competing with other firms which have effectively the same strategy, then they're going to be looking to compete away your premium. How quickly that happens, I can't say.
Okay. So there are myriad ways that he's able to finance these purchases, but the key method, to my understanding, has been fixed income markets, right? So as rates have been going up, right, fixed income has basically been sitting on the sidelines trying to figure out where to put their money. And all of a sudden, his convertible bonds look like a really good deal, which is what they've been doing. They've been financing his effectively convertible notes using fixed income markets. If the Fed can get treasury rates to fall somehow, and those markets all of a sudden become more interesting, and there's a flood of money back, his sources of investment dollars could dry up. But it's it's an order of magnitude better deal for those fixed income capital markets right now than traditional bonds. So, I mean, I don't have any visibility into that changing.
Yeah, but I
Everything
guess
changes.
Yeah.
Sorry.
I guess people are less worried about MicroStrategy, to Yago's point, and I've been saying this every day, than if we just see 20 or 30 companies appear whose sole strategy is to raise debt to buy Bitcoin, right? I mean, it's like...
And sell their shares to buy Bitcoin.
Maybe we just need one or two.
Yeah.
Yeah.
Is that a strategy everyone can employ? Doesn't that
if you're
drive
a monopoly?
that demand?
Yeah. It's I don't actually think it drives up the demand. I think it competes away the margins on the demand. So you could have massive demand. The demand could even continue to grow, but the ability, this works best when you're a monopoly player, right?
Yeah.
Like
a lot of things.
Of course.
And so, yeah.
But the thing I don't get, and maybe we're all kind of like equally confused, but the thing I don't get is, if the premium is shrinking and Bitcoin is skyrocketing, MicroStrategy shares can still be going up. So
but he's long Bitcoin. He's long Bitcoin.
No, I get that.
Yeah.
But
right. So I guess weighting also matters, Bill, because if he's 4x long Bitcoin to his MicroStrategy short position, he could be making money and it could be a small hedge. But it's basically like, depending on the weighting, it's a zero upside bet anyways. or it could be a massive upside bet.
It's not a bet that, I get the grayscale version of that because of the difficulty and liquidity issues around grayscale. You don't have those liquidity issues with either of these two assets. So I don't know. It's not a bet I would personally want to make. So if there was a big options premium, maybe that's how I would squeeze it. But
yeah, it's not the same as the carry trade. Like, it's not as straightforward as buy a future in Contago, sell a future into Contago, buy a spot and collect yield, because it's just far less predictable. And Yago, to your point, like, the two of them could just move together.
Right.
Bitcoin going up should make MicroStrategy go up in theory, just maybe up less, as you're saying, Bill. I want to talk to you guys about something else, though. So obviously this came out this morning. Coinbase says bribed workers leaked data to hackers seeking $20 million in ransom. Kind of a wild story here. Brian Armstrong literally made one of those awkward from below selfie videos just to explain it. Basically, from what I understand, is that some cyber criminals recruited some of Coinbase's customer service agents overseas. Basically said, hey, you're making $20 an hour. How about I bribe you for some customer data? We see this. This is how SIM swaps happen, by the way. This is not unique to Coinbase. This is going to always happen in any company where there's an employee who can take a huge payday to leak information. Happens in every phone company, every bank, everywhere. And then came to Coinbase for a $20 million ransom, said, we'll give you back the information if you give us $20 million in Bitcoin. Brian Armstrong pulled a full, like Mel Gibson in the movie Ransom, and said, I'm just going to actually offer that money to catch your ass instead of but interestingly saying they're going to reimburse impacted customers. And I don't know if you guys have seen the reports, but not unique to Coinbase, but Coinbase customers have lost $40 or $60 million a month right now in these phishing scams. I get them on my phone 10 a day. Gemini, I don't, like Gemini, Coinbase, exchanges I don't even have accounts at sometimes. I get a text, it's like, reset your 2FA, whatever. That's clearly coming from things like this, right? Where your data is leaked. They don't have your keys, they don't have your account information, but if they have your address, your phone number, your name, they can socially engineer something that gets you to click a phishing link. I mean, Bill, you're a fiduciary. You have an obligation to customers of Abra. You have to be dealing with things like this.
Yep. Yeah.
I'm impressed with the approach, but I think it's also a reminder that this can't be stopped.
Yeah. Look, I have my own big personal issues with Coinbase and how they run the business. Yes. And as a crypto company, they're doing a lot of anti-crypto things. This is not one of them. This is a function of the BSA and the Bank Secrecy Act and the money transmission laws, which are effectively also more or less a function of the Bank Secrecy Act. And as long as we have artificial KYC requirements that make no sense, we will continue to have security breaches like this. And that is independent of whether it's a crypto company, a bank, or I think Coinbase is obviously a well-funded company with an enormous balance sheet, and therefore they're a nice target. That's why this is happening to them. But it has nothing to do with, I have a lot of issues we can dig into with why I take umbrage with how Coinbase is being run right now. And this isn't one of those issues. I think, you put yourself in a no-win situation as a CEO, and he chose to fight back, which I'm okay with.
Yeah. Yago, what do you think?
Well, look, I mean, practically speaking, I don't think there's very much you can do about this, right? There's always, if you are holding customer information, right, which is the problem of any centralized, any regulated entity, that customer information is a honeypot, and at some point is going to leak. And it doesn't matter if that's done through a hack or through people working, offshore, or because you've got an AI that's managing it. Someone's going to manipulate the system. With regards to, Coinbase, they made an extremely interesting acquisition recently, which is the purchase of Erupt. And what they are doing, right? They've got the largest custody play by far in the US. They now have the options play, they have the futures play, they have the spot market play. What they are doing, I think, has been, from a business perspective, extremely, they are cornering key aspects of the market with the goal to pull in primarily institutional players and keep them there. And so we have two players in the space, Binance and Coinbase, who each in their own way are working to build sort of monopoly type leverage in the exchange and custody space, leveraging the exchange to achieve that. And so more and more we're seeing a duopoly emerge. And so, regardless of their behavior, that is unfortunately a big risk of the regulated, custodial model that we have attached to crypto.
But even so, we can all say self-custody solves this or whatever, but almost everybody, especially if you're in the US, at some point you're going to touch a regulated centralized exchange to get your money out. Even if you're not using it, you're probably signed.
Yeah. Bank CEO just isn't going to go on Twitter and make a post about his response to some ransom demand. That's the difference, right? So I'm okay with that, but this isn't a function of this is a crypto company. This is a function of the fact that they have, like every other financial institution, FI, they have to collect this information, which is ridiculous. It's been ridiculous since since the 90s.
Yeah, it's so true. Like, why? I mean, this decentralization does solve this.
Right.
Yeah. No, this is one of those key things that decentralization was designed to solve.
And that's what you're building. I mean, Yago, in theory, right? What you're building with Bitcoin OS, obviously, the ability to, we've talked about ZK at extreme length last week, so we don't need to dive so deeply, but the ability to prove things that are proven by KYC and AML without giving all of that data, but to still offer that simple proof solves literally all of this.
Yeah. So, my career has been about trying to build tools which people can use to use systems where they maintain sovereignty, right? Building what we call decentralized systems. And one of the tools that we're building now allows people to go to Coinbase, extract proofs of the information that they've provided to Coinbase, and then use that without revealing anything else to a decentralized exchange or a decentralized lending protocol. And the primary question here is, yes, we have the technologies now, and they keep getting better and better, that give people sovereignty over their data, their assets, their digital lives. The key question is always going to be, to what degree is the individual going to choose convenience over self-sovereignty? And that convenience can also be sort of like the sense that I'm not responsible for my money. If it gets lost, or if my data gets lost, then Brian Armstrong is at fault, not me. And that there some people take comfort in that thought.
Yeah, it's a huge problem. But Bill, I mean, your customers have to do this, right?
I mean, everybody does. There's no exceptions. I mean, if you're either a money transmitter, wealth advisor like we are, a bank, trust, makes no difference. They've tried when it comes to software companies, which was part of the the issue with the guys that were doing the mixing stuff to even get wallets to comply with, BSA, which is, to Yago's point, is ridiculous.
Samurai wallet case is still up. I mean,
that's my point. Yeah,
yeah.
And so look, there's a rumor that the Trump administration is going after Dodd-Frank, and that maybe they'll open up the can of worms of the BSA after that. That would be amazing. It just seems like a big battle where you may have opposition on both sides of the political spectrum.
Okay, another topic as we go. Bill, I don't know if you have a hard stop at 9:30. Can you push for another 10 minutes?
Give you a couple more. Yeah, I've got maybe 9:32 here. Yeah.
Okay, perfect. Because I want to ask you guys about the eToro. Trading platform eToro surges 29% after upsized US IPO. So this is really interesting to me. Really, really interesting. Because I guess I didn't, as much as I love Yoni, I love eToro, I didn't realize how popular eToro, I guess, was. But the fact that this started at a $45 stock and that they were then able to raise at $62, and then it actually went up on the first day of trading and stayed there and closed, I think, at 67 a share. This is not something that happens anymore. Like usually, first of all, we don't even get IPOs anymore because of Lena Khan and the last administration. But now that we are, for one to be this popular, to oversubscribe, and then to actually go up in the first days of trading should be a huge green flag for all these crypto companies, including Galaxy, who could go public any day. This is a big news. This is a big deal that this happened to me.
Totally agree.
It's a very
really
big deal.
happy. Yeah, really happy for them. Yanni's a friend. Congrats to them. I think it's less known here in the U.S. and maybe I'm not sure about Canada, but historically, as I understand it, they offer CFDs, which Americans can't trade. So and those CFDs are basically akin to offering futures in the crypto perpetuals in the crypto markets with significant leverage. That's what contracts for difference enable. And so that type of speculation and gambling can obviously juice revenue and profits very quickly. But that's nothing new, right? To your point, they've been doing this for quite a while, and they've been at it for quite a while. And they have this copy trade where you can basically copy other people's trades, and basically, like, a lot of you can get leverage at the same time doing the same thing, which is a very, very clever model. So clearly it's worked for years. They've never been able to figure out the US because of these limitations on CFDs, but maybe, with the coming rules on perpetuals, they can do something similar here. But yeah, I mean, it's definitely a nice green flag for the crypto markets, and the timing was perfect, right? I mean, with, I don't know if they're announcing holding Bitcoin as well in their balance sheet, but clearly the public markets are warming up to crypto.
Yeah, I'll just say, Yoni's been grinding at this same company for 16 years now, I think, maybe more. He's a Bitcoin permabull. He's taken eToro money and directed it towards development in Bitcoin in particular, and crypto more generally. And he's been an excellent player in the space. One of the great sort of happy ironies of this is eToro tried to go public last cycle, when the specs were going, and they missed out. They basically, after Chamath Palihapitiya sort of reamed the spec market, they had to drop their spec. And so they represented sort of like the closing of the window of opportunity last cycle. And this cycle, they represent opening the window of opportunity. And so I think they're going to be, the example that is going to drive a huge amount of M&A and public listings in the crypto space going forward.
100% agree. By the way, Bill, I'm letting you go right now, but there's a question here. Does anyone have experience with Coinbase's Bitcoin-backed loans? I can tell you guys, I have experience with Abra's Bitcoin-backed loans, and it's a tremendous, incredible product. So if that is something you're interested in, I have no idea about Coinbase, but I implicitly trust Bill. His team's incredible. They're actually, as a CC registered RIA. So if that's something you're considering, not to shill, but your guy is right here. So check him out below. Bill, thank you. I know you got a RIA convention to go to.
We do. We're the little one, but a bunch of CEOs I'm meeting with today. So should be fun.
The little ones that matter, buddy. All right. Yago, can you stay for a couple minutes?
I can stay for a couple of minutes. Thanks, Bill.
Let Bill go. Awesome. Because while we're killing things, which we literally never do. And you never bother to, I mean, we talk about Bitcoin OS and what it's doing, but like you guys are really launching. This is real. I happened to just bring up your website. You didn't know I was going to do this. So sorry in advance, but you guys have a pre-sale. We never talk about those things here, but like you're literally here every single week with me. I'm passionately supporting you. So maybe you could just give us the quick TLDR and what's happening with Bitcoin OS.
Yeah. So what we're gearing up as we've been launching more and more parts of BOSS on mainnet. We need to give people access to tokens, and so we're doing it in two different ways. We have sort of like community-driven gamified activity, which is an airdrop, and we have a more straightforward approach, which is the this pre-sale, which will give you access before anyone else to the tokens. And we've seen, I think everyone I've been telling about how this has been going is sort of their jaw has dropped. We've been seeing so much demand. There's so much enthusiasm.
It's perfect
for
timing.
Being an early participant in BOSS.
You're like the eToro. You're like the eToro of public markets here. I mean, this is finally a good window to do something like this. It's maybe by luck, but it's really impeccable timing.
I mean, it's only partly by luck. We this isn't our first rodeo, and we've been trying to make sure that we do this at a time when the market is ready and users are ready. So this is ongoing. You can go and participate now. We're giving people who participate earlier bigger and bigger discounts. So the earlier you participate, the bigger the discount that you get. And this will give you access, early access to the BOSS platform, the BOSS tokens, so that you can use the platform, and something that we will announce at the end of the month is one other thing that we're going to do, which I think is going to be super exciting, and the first time that any
Can you just announce it today here? I mean, we're all here.
I can't, because that will
sunned us.
The rest of my team will get very angry at me. But I think it's come to, if you're going to be at Bitcoin Vegas, come to our booth, get a drink and a special prize.
Oh, dude, like Vegas. God damn it. I've been trying every excuse to get out of it. I'm non-committal, but it's in like a week. That's my usual thing. It's like maybe in 9 days. The Arch Public guys are doing a bunch of stuff, and they're really compelling me to come. And
look, I mean, there's a secret to Vegas.
I think that you got to go. I just got to I can't do Vegas for more than like 36 hours. So I got to time it right.
Yeah. I mean, the rule is never be sober in Vegas, because if you ever see Vegas sober, it's terrible. So
yeah, you can't sleep in Vegas, which is kind of the problem. But whatever. I guess it's the right place for something like this. So guys, this is at bitcoinos.build. I saw people asking, and since we weren't planning it, it's not in the description. We'll go back and add it later. But and when is this open till? By the way, like what's the timeline?
At least until Vegas.
Okay, at least until Vegas. I like that. So we got about a week and a half. 12 more days. Awesome. Anything else worth adding before I let you jump?
I mean, probably a lot, but we're not going to cover it in the next minute, so we'll have to cover it next week.
Funny how that works. Yeah. See you next week, guys. Thank you so much. I'll be back obviously tomorrow for the Friday 5. Thanks, Yago. Really excited for you guys here. I think this can go exceptionally well.
All right. Awesome. Cheers, Scott.
Bye, guys.
That's dope.